KucCoin CEO dismisses rumors of insolvency. Nexo swoops in as Vauld begins to crumble, and the UK takes a refreshing approach to crypto regulation. This is your nightly crypto news wrap-up. Let's get it. After Sam Bankman-Fried told Forbes that some third-tier exchanges were secretly insolvent late last week, rumors circulated the internet that KucCoin was a prime suspect and that they were about to start halting withdrawals. These FUD rumors also urged KucCoin users to withdraw their money off of the platform immediately. It's not the best look that KucCoin's native token KCS has fallen from around $18 to just above $8 since the start of the month. But in defense of these rumors, KucCoin CEO Johnny Liu has been very active on Twitter defending his project and proving that the FUD is nothing more than FUD. He's stated that KucCoin has zero exposure to Luna or Three Arrows Capital. Since KucCoin is running at full capacity, there's no plan to halt withdrawals. Liu also pointed out that KucCoin is still hiring, fundraising, and using the bear market as an opportunity to build the platform. We've got that in common. The rumor that concerned people the most was the claim that KucCoin only had 300 Bitcoin in their wallet. That was also put to rest yesterday when Tun Kong Hu tweeted a Glassnode chart that proves there's over 16,000 Bitcoin in their wallet. This bear market is the time when we find out who will sink or swim. But to make fake accusations against a platform without your facts figured, well, it's just not only disingenuous, it can be slander. Liu didn't hesitate to say that KucCoin reserves the right to take legal action against those who spread unverified information. Considering what one bad rumor can do to a company in times like this, probably should. Let's pass it over to Frankie Candles for a market watch.
Thanks, Ben. Welcome back. All right, guys, let's jump in and do a little market watch here. We've got Bitcoin coming in at 20,176. Ethereum coming in at 1133. Let's take a look at our top gainers. We've got CVX up 30% on the day. We've got Curve DAO token up 11% on the day. Basic Attention token up 8%. eCash up 5%. Matic up 4%. And Engine up 3%. Guys, be careful out there. Now, on the weekly, we are getting some really bullish signals. But as you guys know, a lot of these bullish signals have not really been playing out with much gusto. Right now, it looks like in the short term, we could get a little bit of a further move down. So keep an eye out for that. If you guys want to follow me, it's Frankie Candles on YouTube or Frankie_Candles on all socials. Back to the news.
Thank you, Frank. If you like these wrap-up videos, make sure to go ahead and smash that like button and do us a favor, share this video with your family and friends. It'll help them out. Considering crypto's market cap has lost almost $1.3 trillion since the start of 2022, it makes complete sense that a handful of projects and platforms are going to drop like flies. The latest of the bunch that's facing challenges is the lending borrowing exchange, Vauld. As a result of them seeing almost $198 million in withdrawals since June 12th, to stop the bleeding, Vauld made the tough decision to suspend all withdrawals, trading and deposits on the platform. As a result of Vauld's insolvency, Nexo has stepped up to the plate and disclosed their plans to acquire 100% of Vauld and reorganize its future operations. Right now, the two companies are in a non-binding contract known as an indicative term sheet, which grants Nexo a 60-day exploratory period to figure out the terms and conditions of the potential acquisition. At the end of the 60 days, they will decide if they want to go through with the buy or drop it altogether. Could depend on Bitcoin's price. Hopefully, Nexo can stop the Vauld ship from sinking since they claim they're one of the few crypto companies left that are in a position to help distressed businesses. In America, for some reason unbeknownst to me, the powers to be want to regulate crypto assets under the same pre-existing umbrellas used to regulate normal securities and commodities. Dirty Gary Gensler even proposed to put all crypto under one rulebook, regardless of this distinction. There's a growing opportunity that's primed to be the future of finance, so it needs its own regulating body, right? Well, it's safe to say that the UK is handling this issue much better than the US since they are growing a new regulating body specifically for digital assets, something I've said we need for years. The FCA, the UK's Financial Conduct Authority, has recently appointed Matthew Long to Director of Payments and Digital Assets, a new unit designated to regulating crypto. Long has spent plenty of time chasing those who commit crimes, as well as economic crimes, since he's a former police officer, as well as the director of the National Economic Crime Command. It's already common knowledge that the UK fully intends to become a crypto powerhouse, but it's still unclear on whether or not they will pursue their own CBDC. Instead of pushing harsh over-regulation, they're actually seeking the public's opinion on how to tax DeFi instead of finding ways to eliminate an ecosystem they can't control. This level-headed approach to embracing crypto as an opportunity instead of stifling progression is a page the U.S. should take from our friends on the other side of the Atlantic. See you on the pitch. That's all I got. Be blessed. Good boy out.